Hi, it's Lee, and welcome to the Tesla Economist. Now, there's been a lot of talk about Tesla doing a share buyback. I'd like to go over what I think it means for the company and stock price, and look forward to hearing all your thoughts on it too. Firstly, I thought I'd just quickly explain exactly what a share buyback is. They occur generally when a company's CFO thinks the stock is undervalued. It would also require there to be funds to make the purchase. The company purchases shares and removes them from the market, thus reducing the number of shares outstanding and the liquidity of the stock. This in turn increases a company's earnings per share if the earnings remain the same, as there are now fewer shares. It will thus increase the stock price. If a company is not reinvesting back into the company and wants to reward shareholders, they can offer dividends or do a share buyback. A buyback is taxed at the capital gain rate, whereas dividends are taxed at income. Dividends or buybacks are not usually a good sign for a company, as they are saying that we can't get a better return on investment on this money than you. So here, you can have it and try and do something better with it. If a company is successful and making lots of cash, then it should be able to grow its success and expand into new markets, release new models, vertically or horizontally integrate, invest more on advertising, increase production, etc. All sorts of ways to grow. If a company can no longer grow and it's highly profitable, then it will start to accumulate cash. The cash will not produce a good return, and most investors would rather have it in their bank account than the company's. Therefore, the company can return this cash to the stockholders in the form of a dividend payment or a stock buyback. Actually though, the reason that buybacks are being considered is due to Tesla's investment grade being increased with the S&P. This gives Tesla the opportunity to sell more bonds to raise cash for a buyback. The government would rather companies invest in new factories, R&D, raise wages, than spend the money on buybacks, and are thus taking action, taxing 1% of buybacks as part of the Inflation Reduction Act. This might mean that Tesla would move before the end of the year. But Tesla is a growth company. They've barely started. They only really produced 2 models, and they're only working on finding the market clearing price and saturating demand for just one of those models right now. And we aren't even close to humouring a buyback at this stage. We need so many more factories first. This is true. Except the thing is, Tesla's growth comes down to one thing: battery and cell supply. Therefore, all resources should be directed to increasing battery and cell production, and this cash should be used to build as many cell factories as Tesla can as fast as they can. Yes, absolutely. Except Tesla has done such an incredible job with cell technology that a new cell factory actually costs relatively little. Tesla are already doing everything they can to increase their cell production, working on these 4680 lines, with Texas, Berlin, and possibly even China, if the rumours are true. On top of that, Tesla have their suppliers like CATL and Panasonic working overtime to try and produce additional cells for Tesla, as Tesla can't get enough. As this is the limiting factor in vehicle and energy production, then it's redundant trying to build more auto factories if there aren't the batteries to go into the vehicles in the first place. Therefore, although Tesla has a lot of growth remaining, they may have more than enough cash and free cash flow to cover all their growth, due to the fact that these factories and cars are just so profitable, and Tesla are expanding the existing factories and getting a massive amount more production from them, like we just saw in Shanghai. In other words, minimal capital expenditure for massive amounts more income. On top of that, Tesla still have their 2 largest factories barely doing much, relative to their potential. These will also produce Tesla's most profitable vehicles, and will give a massive injection to cash flow once ramped up. This meaning even more profit that will likely just accumulate as cash in the bank, as it's too much to be invested. There simply is not enough labour or engineers for Tesla to expand at this rate. These factories are just so profitable, and the return on asset is upwards of 1,000%, and will be even higher by the time FSD is complete. Just think about it. What if each factory produces enough cash flow to build 10 more factories each year? It's simply not possible. We all know Tesla is going to end up with an insane amount of cash. No 2 ways about it. Well, unless, and this is the only way I thought Tesla will get through this much money, is if they don't sell robotaxis to the public and keep them for themselves. They would cost a lot to produce in the quantities they need. And perhaps Tesla could also self-fund their own energy generation business. But we're not at robotaxi stage, and they can't make enough energy products yet either. Right now, the stock is on sale. The stock price is pretty much at a 2-year low, despite how much the company has grown since. And hopefully, we're about to see Tesla truly grow with fewer third parties holding them back when they start producing their own in-house cells. It makes sense to buy the stock when it is this low. I'd be buying more stock if I could. I pretty much bought more than I probably should have when it hit $240. A little early, but I thought $240 was a crazy price. I can't afford to buy any more now, and I don't feel comfortable selling shares to buy leaps this time, as we are dealing with macro and geopolitical issues in addition to the usual FUD. In the past, when I have sold shares to buy leaps, it was solely from internal issues, FUD and manipulation. I knew Tesla would be alright through them. In retrospect, I probably should have just bought shorter call options rather than longer leaps, but I also like to buy as far out as possible in case a recession happens, so I can cover myself through that, which is what did happen this time. Anyway, although I can't afford to buy more shares, Tesla actually can. I think people are expecting that if they do a buyback, it would be around the region of about $10 billion purchased. That would mean they buy about 1.5% of the current shares, thus increasing our ownership of the company by 1.5%. Although it won't mean we actually have any more shares, it just means that each share will be a higher percentage of the company. $10 billion would also be about the equivalent of the rights issue they did earlier, so this would be a reversal of that. We'd expect an amount of that size to have an effect on the stock price. It would be a lot of shares, and would possibly start moving the stock in the right direction, meaning that shorts might cover their positions, the sentiment could change, and it could start to go up for those reasons, along with a very good Q3 hopefully. On the other hand, there are also a lot of stressed out investors, and they might have had enough and be concerned about other issues and might start to convert some shares into cash if the stock has a slight recovery. If Tesla don't do a buyback, then the cash is just sitting there getting 3 or 4% nominal return, which after inflation is counted in will be close to about negative 6% return in real terms. The cash is losing purchasing power continually in these times. Inflation is not coming down. I think we have a lot more to come. Therefore, it might not be wise to have so much cash, particularly when we expect such amazing growth to come from Tesla too, and presumably Tesla and Elon do as well. So we'd think that they assume buying Tesla stock is also a fantastic investment. It would show that they have confidence in the stock price as well. But we are in a recession. Perhaps they want to keep a war chest as a large buffer to weather the storm and navigate potentially tough times. Although Tesla does have these amazing margins, they could always reduce prices. And if things are that bad for Tesla, then they're going to be that much worse for others, which might be another reason to again keep it as cash, as perhaps there may be a garage sale of distressed assets going cheap. Now, before you comment saying Elon would never buy a legacy auto company, he has literally said in the past he would entertain it, and I think we expect a high possibility that there will be some distressed legacy auto companies in serious trouble. The thing is though, I don't think Tesla would buy these companies outright, with all associated caveats attached to them, namely car dealer networks and unions. There's a chance that Tesla may just buy the existing factories from legacy. Tesla have proven that they can successfully retrofit. I know it may not be as tidy, as efficient, or have as low a cost production as their own factories, but what if it saves them 2 years? In the meantime, Tesla could be building their own factories too. Or what if Tesla purchased the cell and battery factories that Legacy are making? Maybe even their electric car factories too, without car deals attached. I'm not saying that I want this, I'm just suggesting the possibility. And obviously Tesla could run an electric car company at a lower cost than e.g. Ford, along with likely hitting volume production. It would transition the world faster. Anyway, like I said, Elon has entertained it, so he has obviously had something in mind. I'm just guessing what it might have been. Anyway, there is a good argument for Tesla to do a buyback, and for Tesla not to. I think, however, once we see Q4 numbers in, that we'll see that Tesla has so much cash flow, they can likely invest in whatever they need to anyway, and it would be nice to buy some more shares whilst they are this low. Not to pump the stock, as it's not really a factor for us holding long term. More so, we can just own more of this fantastic company. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.